Okay, today we're gonna discuss Igcse accounting. Okay, paper 1, May June 2022, variant 1, 2. Okay, alright, so let's look at question number 1. So which tasks will be carried out by bookkeeper? Okay, so when you see the word bookkeeping, bookkeeper, okay, so bookkeeping, so basically their work is only to record. Remember that their work is only to record. Accounting basically do everything, okay, from the process of identifying, recording, analyzing, interpreting, preparing financial statement. So if talking about all process, that one is the work of accounting. So just remember, when you see the word bookkeeping, always record. Find the word keyword record. This is very famous question. Okay, so recording financial transaction. Okay, question number 2, the following ledger account appear in the books of Leah, a trader. Okay, so you see this is Ambra's account, so which statement is correct? So you need to identify first who is Ambra's. Okay, so who is Ambra's to Leah? Okay, so the keyword you can see is from the balance BD. Okay, so you see that the balance BD here is on the credit side. Okay, asset, liability or capital have credit side. Okay, so basically usually the one that have normal credit balance is liability and capital. So obviously in this account is talking about Amras. Okay, this talking about ledger account. Okay, so it should be trade receivable or trade payable. So we identify like that first. So now, as you know, trade receivable is current asset, trade payable is current liability. So the one that have balance on the credit side should be trade payable. So Ambras is trade payable. Another keyword you can see actually purchase. Okay, why? Purchase means we purchase goods from Amras. Okay, so should be Amras is a supplier here. Okay, so let's look at which statement is correct. So Amras allow Leah 100 trade discount on 30 April. So you can see 30 April discount 100. But the key here say trade discount. Do you need to record trade discount? No, we don't need to record trade discount. We only record cash discount. Okay, only cash discount can be identified as discount allowed or discount received. Okay, so A is wrong. B, Ambra's only are 2,100 on April. Okay, now you look at on April number 1. Okay, 2,100. Okay, this is trade payable account. Okay, Ambra's is trade payable. So should be the one that who owe to Ambra's is Leah. Okay, Leah is the one who owe to Ambra's. No Ambra's owe to Leah. Okay, see Leah owe Ambra's 2,950 on 30 April. Leah owe Ambra's 2,950 on 30 April. Okay, so now you look at 30 April, so should be looking at the balance CD. Okay, so correct or not? Okay, 2,950 is Leah owe Ambra's? Yes. Okay, because why? Because when you bring to May 1, it will be on the debit side, balance BD. Okay, so 2,950. So correct lah, Leah owe Amras. Okay, let's move on to next question. So Sarah sold goods on credit to Zafar. So how was this recorded in Sarah's ledger? Okay, sold goods on credit to Zafar. So now we want to put ourselves as Sarah. So obviously when sold goods means sales lah. So sales will be on the credit. Credit sales. Zafar debit. Okay, but we need to identify which one general ledger, which one sales ledger. Sales ledger is trade receivable. Okay, only trade receivable account. So the answer will be Zafar, debit. So debit Zafar, credit sales account. Sales account is general ledger. Okay, next. Omar sent a credit note to Miram for goods returned. How would Miram record this transaction? Omar sent a credit note to Miriam for goods returned. Okay, so now you need to put yourself as Miriam. So means that when Miriam received the credit note, Miss Miriam is the one who returned the goods to Omar. So when Miriam returns goods to Omar, so means that is a purchase return. Okay, so purchase return credit because it must opposite to purchase. Okay, so credited purchase return. So you debit Omar. Omar is a supplier to Miriam. Fine. Ben sold goods to David 900 for cash. In which book of prime entry would David record this transaction? Okay, so this one you can see is 900 cash. Remember, anything, any transaction that involve cash or bank always directly go to the cash book. Okay, next. Petty cashier received 100 from the chief cashier and $10 from employee who have made private calls on the business telephone. How would this amount be recorded in the petty cash book and the cash book? Receive 100 from chief cashier and 10 from an employee. So total you receive is 110 in petty cash book. Petty cashier. So now we're talking about petty cashier. Obviously petty cash book. So petty cashier receive 110. So when she receive 110, so means she need to debit petty cash book 110. Okay, and credit cash book 100. Why credit cash book 100? Because petty cashier receive 100 from the chief cashier. Okay, petty cashier receive 100 from the chief cashier. So cash book will reduce by 100. Okay, because it transfer from cash book to petty cash book. Okay, it transfer from cash book to petty cash book. Alright, so the answer is donkey D. So what is an example of compensating error? So you just remember what is compensating error. You remember the keyword cancel out each other. Okay, I just remember like this. Okay, so cancel out each other. Okay, so let's go through one by one. A payment for office equipment repair was debited to the office equipment account. So you see, supposedly office equipment repair, but recorded in the office equipment account. So it's a wrong class of account. So wrong class of account we call as principal error. Purchase of goods from C. John was credited to C. John. So you see the error here is in the name, wrong name. So this one, when wrong name, we call as commission. The sale of goods 65 to A. Aziz was entered in the books as 56. So figure different. So when the figure is different, we call as error of original entry. And last one, the wages account was undercast by 100 and the rent account was overcast by 100. Okay, so means that each account undercast, overcast. Okay, wages account, yes, is expenses. Both is expenses. Rent also expenses. Okay, expenses. This one also expenses. So means should be both is on the debit side. Okay, but one is undercast, one overcast. So they are basically cancel out each other. Okay, so the overcast one can cover the undercast. Okay, so the answer is donkey. Okay, remember, error that cancel each other. Okay, number 8, after the preparation of up to draft financial statement, 2 errors were discovered. Okay, the purchase of machine by bank transfer 500 was omitted from the account. The purchase of motor vehicle 15,000 was entered in the motor vehicle repair account. So what effect will correcting this error have on the non-current asset and the working capital? Okay, so non-current asset, I think you guys know what already. What is it? Okay, it's a long-term asset, fixed asset. Working capital. Okay, there is a formula for working capital, which is current asset minus current liability. Okay, so let's correct first the error. Error number 1, purchase of machine by bank transfer omitted. Omitted means what? Not record. You forgot to record. Okay, so just need to record back. So how to record back? Purchase of machine, so you debit machine. Okay, and then you need to credit what? So you credit your bank. Okay, debit machine, credit bank. The purchase of motor vehicle 50,000, but you enter wrongly in motor vehicle repair account. So you need to cancel the motor vehicle repair. So your motor vehicle repair is expenses. So when you want to correct the error, you credit motor vehicle repair. So you need to debit, just debit back motor vehicle. Okay, because motor vehicle is non-current asset. So you see, motor vehicle and machine both are non-current asset. So it increased by 5,000 and 50,000. So plus together, increase 20,000. Okay, what happened to working capital? So working capital must something involved in current asset and current liability. So from the error number 1, bank transfer. So bank transfer means your bank reduced. Okay, so bank is current asset. So when you credit bank means that your current asset reduced by 5,000. Error number 2 does not related to current asset or current liability. So when current asset reduce 5,000, working capital automatically also will reduce 5,000. So the answer is C. Okay, why is a sales ledger control account usually prepared by different member of staff than the person who maintain the sales ledger? Why need to have different staff to do different work here. So means sales ledger control account different person, sales ledger different person. Why? So basically to avoid fraud to happen. So the answer is to defer or to deter fraud. Okay, number 10, what will be recorded on the credit side of the sales ledger control account? Okay, so sales ledger control account, other name is trade receivable. Who don't know? Okay, I inform you. Okay, so they are current asset. Okay, they are current asset. So when current asset, it increase on the debit side, reduce on the credit side. Okay, remember sales ledger control account, increase on the debit side, reduce on the credit side. Okay, cash refund to credit customer. When you refund to credit customer, so means you need to credit bank. When you credit bank means you debit. So this one debit sales ledger control account. Okay, this one in the sales ledger control account should be on the debit. Credit sales will increase customer debt. We increase sales ledger control account, so it will be on debit. Interest charge on over the account also will increase the debt, so this one also should be debit. And sales return, yes, this one will reduce the sales ledger control account, this one credit. So the answer is D. Okay, we continue the next question in the next video.